Guys, welcome back to another weekly market breakdown. Today we're gonna focus on some US dollar pairs as well as the gold, because we know of the negative correlation that it has over there. If you're new to the channel, the sub would be appreciated, as I do provide valuable educational content on a daily basis. And if you enjoy the videos, please smash the like button for the YouTube algorithm. And as always, let me know down in the comments below exactly what it is that you'd like for me to cover in my next video. Now, firstly, starting here on the monthly time frame, we can see we're at this level that acted as structure here. It was acting as a resistance. The market broke above that resistance. It became support. Market broke below that, tested this with that liquidity week. Market then broke all of this support, and it's now testing it again as resistance. So again, we can definitely see the pullback before the continuation to the upside there. Now, from a weekly perspective, what can we see? Now, on the weekly time frame, we can see how the market had broken above this weekly structure that the market had created over here. This level in the market acted as a level of resistance. Again, and after resistance gets broken, it becomes support. So again, we can see the market pull back to that level before we go and test that previous level. Now, here from a daily perspective, the market had finally broken out of this consolidation phase that the market had been testing for multiple times. Now, if you drop down on the line chart, we can clearly see over here that was the high, and this over here was the low. And if we go back on the candles, you can see how the market was stuck within that consolidation, finally broken out of that. And in doing so, the market also printed this massive impulse, and after an impulse, we obviously expect a correction. And then we can see how the 0.382 is lining up perfectly with the structure that the market had created over here. That acted as a level of resistance that is now turned support. Now, going into next week, we've got a lot of high impact news coming through across all major currencies. And if we go and have a look quickly over here on the situation that we got over here, so looking at the calendar for this week, we can see a lot of news across all kinds of pairs. We also got the NFP that's coming out next week, so just keep your eyes on that as well. So next in line, we are done here with the US dollar index. Next in line, we've got USD Jpy. Now, USD Jpy from a monthly perspective, first of all, the market had broken above the strong level of resistance of a year. Now, the market had not pulled back. We just had another green candle printed based on the positive data that we had coming through for the US dollar. The market also printed that impulse, an altered impulse. You expect a correction. We had to pull back to the 0.382, and once again the minus 27 is lining up with that level of resistance. So in the long term, we can definitely expect the market to pull back to that level there as well. From a weekly perspective, we can see how the market is currently testing a strong level of resistance created there once, twice, thrice, and it's now testing it for the fourth time, so giving us an indication once again the pullback is expected. Now, here from a daily perspective, we can see how the market had just tested that previous level of resistance, and the market printed this W formation. After a W formation, you expect to pull back to the neckline before the continuation. Also, if you take our Fibonacci there from the low to the high, we can see how we got a pullback of a 0.50 over here, which is a 50% retracement of the impulse, which the market is more likely to come and test before the continuation. So once again, USD JPY can see some weakness this week because of the dollar that we have spoken about now. Now, next in line over here, we've got the Euro USD. Now, starting here on the monthly time frame, what do we have? Now, from a monthly perspective, if you look left over here, we can see how the market is testing very strong monthly support. This level acted here as support, broken, became resistance. We had all of that, and it's now testing once again as a level of support. Now, from a weekly perspective, what do we see? Now, from a weekly perspective, we can see the market printed this massive impulse. Now, after an impulse, you obviously expect a correction, and if you take our Fibonacci there from the high to the low, we can see how the first Fibonacci level, which is the 0.382, is lining up perfectly with that structure that we can expect the market to pull back to going into next week before the continuation to the downside, if it wants to go to the downside. Now, once again, we can see that level acted as a very strong level of support that we identified from a weekly perspective. Going into next week, can definitely expect a pullback before the continuation there to the downside. Now, next in line, we've got Gbp Usd. Now, the situation that we got here on Gbp Usd is we can see how this level over here, also very strong monthly support. The market acted as resistance, broken above in that, printed this weird looking information, went to retest, continued down lower, and the market is testing that level there once again. from a weekly perspective, what do we have? Now, from a weekly perspective, we can see how the market had printed this inverted head and shoulders. Market also printed this impulse and started the correction. Now, if you take off Fibonacci there, sorry, from the high, from the low to the high, we can see how the market is testing and slightly rejecting the 61.8, aka also known as the golden ratio. Now, from a daily perspective, what kind of structure do we have over here? Now, from a daily perspective, we can see how the market had printed this structure that we had over here as well. Now, this is the most important structure that we need to look out for, because the structure here acted as resistance, support a couple of times, and it's once again acting as resistance. Now, if we had to look for any buying opportunities here, we want to wait for clear break above that level. Then on the retest, we can start looking for buying opportunities. In doing so, the market would also print this inverted head and shoulders from a daily perspective, which is considered a bullish pattern from a technical perspective. Now, the situation that we got here on USD CAD from a monthly perspective, market is testing very strong level of resistance from a monthly perspective, and we can definitely expect a short pullback before the continuation from a monthly perspective. What do we have? Now, we can see here from a monthly perspective how the market had printed this W formation, so we expect the market to go and hit that level first before continue down, going lower. But one thing we need to keep in mind is we expect the US dollar to be slightly weaker this week up until the NFP data come out next week. Now, this was the last structure that the market had created over here, so that's probably where we'll see the pullback. Also, taking off Fibonacci there from the low to the high, we can see how the 61.8 is lining up nicely with that structure over there. We can definitely expect a pullback before the continuation, and on the daily, we are testing support that got broken. That was resistance once, and the market is testing that resistance once again. So going into next week, once again, we can expect a pullback before the continuation there as well. Now, next in line, what do we have? We've got the gold. Now, gold here from a monthly perspective, is we can see how gold had firstly printed this W formation, came back, tested the neckline, so we can expect gold to show some bullish momentum going into the new week. From a weekly perspective, we are testing very strong level of support, and a short pullback is expected once again before the continuation. Now, from a daily perspective, what do we have? Now, here on the daily time frame, we can see how the market had just printed this overextended information. After an overextended information, you expect a pullback to the left leg before the continuation. And if we take our Fibonacci there from the high to the low, we can see how the 0.382, which is the first Fibonacci level, is lining up perfectly there with that left leg that we can expect the market in next week to pull back to before potentially going higher as the NFP data gets released. Now, the Nasdaq 100 is quite straightforward. Now, the Nasdaq is still stuck within this consolidation, so there is no trading opportunity to look for us yet. We want to see a clear break above that level, which we'll probably see with the weakness of the US dollar going into this week. And then we can expect the market to go and test that previous level there, retest, and go and test that strong structural level that the market had created over there as well. Alternatively, if the market wants to go down, which I don't think it will this week, then we can expect the market to continue lower. However, one thing to keep in mind this week would be the PMI data, also the NFP data for the US dollar, because that's the most important data that we'll be looking out for this week. Now, if you enjoyed the video, firstly, thank you for taking out time to actually watch the video, and thanks to all my loyal viewers and subscribers. And as always, if you enjoy the video, you can just smash the like button for the YouTube algorithm. And as always, guys, cheers for ears and good luck with the weekend as well. Thank you. I'm out.